Hello, everyone. A warm welcome to all for today's workshop on signal processing in financial markets, greener pastures in global fintech for engineers, sponsored by London Stock Exchange Group Technology. So this is our second workshop happening in order to encourage you all for 5-minute video clip contest organized by IEEE Signal Processing Society student branch of chapter of University of Moratuwa. This workshop will give you some insight on how global fintech applies to engineering connecting financial markets with signal processing. Guidance is an essential thing that led us towards a successful path. So as the first step, I would love to welcome our student advisor, Dr. Chamira Edisuria, to join us here. Over to you, sir.
Thank you very much. Actually, from the since I think March 2020, we are in semi or partially lockdown situations, and as a student branch chapter society, so we have been limited in certain events we can organize, and as a part of our endeavor to disseminate the knowledge on signal processing, and so we have started certain works, and I would like to welcome all the our guest speakers, Mr. Najit Liyanage and Mr. Thaparan Sripavan and Mr. Hiran Chayaratna and other representatives of the LSCG to this event. And I also would like to welcome all the student participants, and good morning to everyone. So as a Signal Processing Society chapter, we had a successful series of webinars from the prominent researchers in worldwide. And as another event, we thought to have a 5-minute video clip contest, taking a leaf from what is happening in the international arena, similar to the events organized at the top IEEE conferences in the signal processing. And on the other hand, we would take this step to actually further enhance the knowledge and disseminate knowledge, and so the some of the general people. So we organize this event as using the local languages as well. And I should thank mainly the LSCG for sponsoring this event. Actually, they played a important hand in this endeavor. And so we had one workshop in the last week, basically to give the basic introduction of the 5-minute video clip contest and the other rules. And this is a second workshop, is especially dedicated for the signal processing in financial markets, or we call the financial signal processing or fintech solution. There are several names, and the LSCG is the pioneer in Sri Lanka for that event, for that area. And I am really happy to have them in this competition as well. So let me first introduce the our guest speakers. Actually, they are seniors of to me, and actually the past alumni of our department. So if I introduce first Mr. Thaparan Sripavan, he currently heads the Hardware Accelerated Systems Division at LSCG Technology. He has been leading the efforts of designing and building heterogeneous computing solutions for the suite of capital market products offered by LSCG's technology arm, LSCG Technology. Prior to his current role, he worked on building smart order routing systems, market data systems, and exchange systems, including the trading engine for the London Stock Exchange. Mr. Sripavan obtained his BSc in Electronics and Telecommunication Engineering from the University of Moratuwa, and also holds an MBA from the Postgraduate Institute of Management, University of Sri Jayawardenepura. Actually, he's closely working with the department and also supporting in many other aspects, and he's an expert in FPGAs, and so we should acknowledge those aspects as well. Let me introduce Mr. Najit Liyanage. Mr. Lieneke is currently leading the risk and collateral management product line for LSEG technology, including the design of global credit system for LSEG FX markets. He has been leading the efforts of designing various product lines in the past across smart order routing, market data, clearing, and risk management at product manager capacity. Najit obtained his BSc in Electronics and Telecommunication Engineering from the University of Moratuwa, MASc from the University of Victoria, BC, Canada, and also holds an MBA from University of Colombo. In fact, actually, I carried out his master's thesis for my master's actually as an extension. So we had the same supervisors for our master's. So, and I'm really happy to have Najit in this workshop as well. So Najit and Thaya, so I would like to invite you to present this interesting session. Continue.
Thank you.
Thank you.
Yeah.
Thank you,
Dr.
Dr.
Chamira. Very generous intro. Thanks.
Yes. So Thaya, let me start first, and then I'll hand over to you.
Yeah.
Yeah. So this session will be done between Thaya and myself. Of course, Hiran will jump in as required. So it's amongst the three of us. So first of all, we need to thank Dr. Chamira. Bringing in a topic to this video contest, something that's seemingly unrelated from the looks of it, but it's extremely related. So you'll get to know what we are saying throughout the presentation. So I guess the objective of the session, as much as we want to share experience, exposure, even in a certain theoretical side of things, we want to see some of the videos coming out as part of the context. Because I think, Dr. Chamira, correct me if I'm wrong, we do have a separate sponsorship related price as well.
Yeah, yes.
If you come up with a video that's related to this specific topic. So that's a general spirit. But along the way, we will also explain who we are and why we say, why we explain to you things that we say today. So let me share my screen. So, okay, let me share it again. Okay, hope everyone can see my slide. So we'll try and make it a more dialogue, but we'll go through the slide deck, but please feel free to interrupt and ask any questions. It's quite awkward when we heard, some prefix in front of our names, Mr. Lieneke and Mr. Thayaparan, but we generally go as just our first names. Just interrupt and just simply say, Najit, I have a question. That's how we operate. So feel free to ask a question. So today's topic is around signal processing in financial markets. And it's a fairly broad area, but from where we come from, it's definitely green pastures in a massive industry called the fintech. So we'll walk you through why we say that, and it's extremely relevant for engineers. So let's see where it goes. Okay, sorry. So we'll start with a very basic slide, but we'll be very quick in the next few slides. So let's look at the financial system. Very open question. So who created this system? Well, it's just like any other system that you're familiar with, dealing with as engineers. It's a man-made system. Maybe you might not really want to buy what we are saying right now. So let's see where it goes. From where we come from, this is no different to any other system: electronic systems, telco systems, electrical systems, or even a mechanical system. For us, it's another system, and we see a lot of resemblance in that. So what is this system based on? If you don't really want to buy what we are saying, so it's based on a very fundamental principle, sort of a duality of what we want to do out of this system. It's called risk and return. This is not a complex statement. It's just risk and return. Whenever you have money, this is all you think through. Imagine you have 1,000 rupees in your pocket. What do you want to do? Either you want to make it, you invest on it. Maybe you want to make it 2,000 rupees by tomorrow. Or maybe you go to a shop when you want to buy something, you want to make sure you buy something, from a, tangible worthiness, something that worth more than 1,000 rupees. Your general thinking is to go for some return. I need more out of these 1,000 rupees. But do you want to risk yourself by doing that? Absolutely not. So this is the exact conceptual thinking behind the entire financial system. We have a certain level of, worthiness. We want to grow on it, but not really getting into any risk. So this is called risk and return. When you talk to a non-engineer, this is the general definition of a financial system or an economic system, risk and return. So let me take a look at this from engineering perspective. Let's see where it goes. How is this even related to engineering? How on earth risk and return is going to be related to engineering? So let me have a couple of thought-provoking couple of questions. How often do you use exponential function as a simple statement? In engineering, by fundamentals, this is one of those functions, or even a whatever you call it, non-algebraic sort of a function. But we use this extensively. I think specifically on electronic side of things, the moment you make X a complex number, you start seeing the transformations coming in out of this. Other dimensions coming in, things like Fourier transform, etc. The fundamental atomic operation is the exponential function there. But did you ever think about where this is coming from? So this is actually coming from the notion of return. This is generally the natural phenomenon of a growth. That's the exponential functions. This was first discovered because of a financial problem. So going back to the same example, let's imagine you have 1,000 rupees in your pocket, and maybe you think, I don't want to buy anything out of this 1,000. Let me deposit and see, what my net worth by end of this year. So you go to a bank, the bank might say, okay, we'll give you a 10% interest. So there was this fundamental problem. Okay, so there is one bank who says, end of the year, we'll give you 10% interest. I have 1,000 rupees, it becomes 1,100. Another bank says, by the way, I'll give you 6 monthly interest and it's compounding. Looks attractive. End of the first 6 months, you get what? 105. And you reinvest. By the end of the year, I think you'll get something more than 110. So Bernoulli back then was looking at, okay, what happens? What happens is compounding is going on a continuous basis. Happens maybe daily basis, hourly basis, minutely basis. He figured there is a universal constant, and that's E. There is no way you can grow your 1,000 rupees beyond the fact of E. So this is the origin of the return concept. So what it means is return is bounded by the natural phenomenon of growth. How a tree would be grown in a system or in the nature. So the return embeds the natural phenomenon is our first point. It's driven by exponential. So now taking you guys back to the financial markets, wherever you look at a financial markets related problem, you look at something like interest rate calculation or even portfolio. Don't worry about the language, but we'll get there. Even when you look at my, investing in a stock market, wherever you look at a mathematical model for your return, you will find exponential function as much as you find this function in engineering. Secondly, how often do you use probability in engineering? I think it goes without saying it's extensively used in telecommunication. I remember the conversations we have had with Dr. Pratap Singh. He used to be, I think super senior Thaya, right? I think we used to have these conversations with him. He's one of the other lecturers who we continue to have this dialogue. It's everywhere in telecommunication, and why is it there? And it's extensively used. And believe me, this is precisely what we use in the financial system as the risk. We do this on a daily basis. It's nothing but just trying to measure the uncertainty. When there are too many things happening at the same time, we don't know which one to expect. You come up with a model, and that's probability. And in the financial world, there have been a number of Nobel Prizes. The quite notable one had been what we generally call the Black-Scholes model. Some time back, the engineering thinking, when it slowly started coming into the domain of financial system, somebody thought, maybe why don't you try probability, the concept of probability in the financial markets. And that was the first invention of getting the notions, whatever we used in the engineering field, things like, you're very familiar, something like Brownian motion came into financial systems. And there was, this concept about what we call, there are different contracts in the financial world. What must be something that's traded in a stock market, but there are derivatives. There is a derivatives pricing model that was based upon this notion of probability. And there were a number of Nobel Prizes awarded for that. So we use these two, and anywhere you go through the financial system, it's driven by these two fundamentals. So any information coming out of the financial system, therefore, is a reflection of risk and return. So it goes without saying, therefore it resembles the uncertainty and the oscillation nature of what you see in any natural system. So we'll go there slowly, but this is what we see. Financial system is as relevant as any other systems that you're dealing with as engineers. So therefore, is this different to any other system engineers deal with? Absolutely not. Right. So this is where we come from. We don't want you to believe just because we are saying this. This is what I think today's point of view, I think he is the 10th wealthiest person in the world, Warren Buffett. He stated this, why the scientists and the engineers have shown their back for the last few centuries, which they shouldn't have. And he goes to the extent of even blaming Isaac Newton for showing his back to this field. So Isaac Newton came up with three fundamentals or natural, laws, three laws. But so Warren Buffett used to say he forgot the fourth one because he invested in a market, lost his money, and he showed his back. And he never looked back again to the financial system. Had he looked back, we could have come up with the fourth law of the natural phenomenon. That's returns decrease as motion increases. As you can see, even the Warren Buffett believes that the risk and return is an engineering principle. So I'll leave you there. So let's slowly walk into where we come from. So we are not talking out of any theories here. We do this. Now, going back to the financial signal processing. Okay, I'm pretty sure anybody who would have had any interest getting into this as a video would have Googled this. The moment you Google, I'll show you what appears immediately. You start seeing some signals. You see S&P 500. I'm sure this is very familiar images in the Google search. And so what's on your left is what we call a stock market index. When you look at it, I'm pretty sure you would have seen this signal or something familiar in a lot of other systems. When you look at the returns out of it, so return means if this is a signal, 2-day difference divided by today's value, sort of a difference. So it's an investment notion. What is my return? What's my growth? When you look at it, it almost looks like a speech signal. So this is what you generally observe. So this even if you don't believe us and the Warren Buffett, this is a good example. It is relevant. So you could see a lot of other, so the first one was S&P 500, and this is a particular asset. Even if you look at a particular asset, so this is Apple price in the stock market, it looks very, very much like any other engineering signal. So this is what you see. It's very, very famous screens when you Google search. I think by this time, I think you should at least buy into what we are saying. It's relevant to some extent. Okay, so let me take you to what you've been exposed with the public material and why we say that we are exposed to things more than this. So what you have been seeing generally and in the public is something that emanates or coming out from a stock market. But stock market itself is not the financial system. Financial system is massive. It's extremely broad and massive. It actually has a lot of businesses. Stock market is just one. So as an example, so the London Stock Exchange is right in the middle as a stock market. But if you take ourselves, London Stock Exchange Group actually tries to cover the financial system as much as possible. That's the expansion we take by acquiring companies. So the spectrum of financial system as a business, number of business entities wise, I'll put some keywords in, but it's not that you need to understand what they are. So you have the financial market right in the middle, and then you have the major banks right next to that, even major banks like Goldman Sachs. So they might be operating in different roles. Some people might be investing their money in the financial markets, therefore they're investment banks, or they might be helping somebody else to invest, so they become brokers or dealers. These are massive businesses in the financial system. And they might be helping other people to execute their financial transactions. They become execution agents, all the way down to the point where some people might be helping you pay your transactions as a credit card provider, Visa or MasterCard. They are also sitting in the financial system. And then where does it all go to? Well, you can't have running things on a thin air. This is actually going into certain registries down the line. So it goes to a depository, it goes to a central bank, it goes to a certain extent where there are places that you keep your money. And then along the way, there is risk management. So this is what you mean by a clearinghouse. And there is somebody to oversee the entire spectrum. And those are the regulators. And if you take Sri Lanka, it's pretty much driven by the central bank and what we call the SEC, or the Securities Exchange Commission. So there are regulatory bodies. This is the entire spectrum when we refer to as the financial system. So you need to admit, when you do a Google search, when you start seeing, oh, the financial system is actually having signals that are quite relevant to us, you are pretty much looking at the financial system through a keyhole, but it's much broader than that. Now, let's see what we can suggest you as the competition goes on. So here are some examples. Maybe you can try it out. So I'm pretty sure it's just a 5-minute video, just even an idea going out, just even repeating something that is happening out there. These are some key examples of what you can try out. We are not saying these are the only examples. The list is massive, but we are giving out what a layman could think of. Very fundamental things. So what are these examples? Where exactly in this financial system where people might look at signal processing? So these are real examples. This is something we see day in, day out in the businesses. One is rebalancing investment portfolios. This is loosely called hedging. A portfolio is none other than, if you have money, if you want to buy assets, would you want to buy, would you want to spend all your money in one asset? No. I mean, even if you look at your wealth, you might want to buy a land, a car. So likewise, you distribute your assets, the portfolio. But in what kind of a ratio? That's a mathematical problem. So this is what we call rebalancing my investment portfolio. There's huge traction, and people are increasingly looking at the prices and figuring out what my portfolio should be. So there is a huge and increasing need for signal processing coming in. The second one, like I told you, regulators are watching everywhere. And so therefore, you need to surveillance the market. The moment I say video surveillance, you see the relevance. Oh, people are looking at the videos, trying to see the suspects. Same applies here. Regulators are looking at the signals and trying to figure out where the suspect is. So it comes up with a signal processing problem. So we call this surveillance, the reg alerts. When you go back to indices, now, why did you even look at S&P 500? And so that's the broader view of a particular country. But what about your rebalancing portfolio? Can someone tell me where it goes? So this is called indexing, custom index. Indexing business is a huge business. So within our group itself, we have FTSE Russell as an example. And if I tell you the worth of that business, that's actually touching the billions of dollars. It's massive as a business. Now imagine applying signal processing there. These are massive problem, not really problems, but a major applications of signal processing coming in there. Now, there is also market data dissemination side of things. I'm not really sure whether you are aware. Of course, it happens outside our perimeter. Our group expanded, acquiring another company called Refinitiv quite recently. And it's a data distribution, intellectual data distributor business. And one of the problems they have, and a lot of the other competing businesses do, when you publish data out, you need to make sure they are of high quality. So there is a lot of interest in terms of ensuring quality coming in, and it's a, to be honest, a multidimensional problem. You can think of signal processing in there, and people are doing that in general. And then finally comes to something that's very close to me and Taya, and of course Hiran, is risk management. I don't know whether you are heard of this term, filtered historical VAR or FHVAR, or in general VAR. There's a lot of traction in the last few years because of the financial crisis. People talked about margin runs, etc. So maybe I'll pick on that. I'll elaborate on that, but it's up to you to figure out where exactly you want to do your video. So it's up to you. But let me quickly go there. Nothing complicated, but very, very simple terms. Let's imagine you have your asset portfolio T0. That's your portfolio value V0. What we mean by risk management is that, okay, in 5 days time, or maybe simple T time, what if the market breaks down? What if the market devalues my portfolio? What kind of a position am I in? So I incur a loss. So if I'm making a loss, if I'm carrying somebody else's portfolio, for example, this is what the banks do. Banks don't have assets, not necessarily their assets. They carry clients' assets. The banks are scared of this. When I carry somebody else's portfolio, they might do this in a rigorous and a continuous basis and say, oh, let me predict the loss of this portfolio to the best of my knowledge, and let me cover that with another deposit. So if I go to a bank with a massive portfolio and say, you manage it, they might say, look, I need a deposit, something similar. So that's what we call margining. Now, the engineering challenge is, how do I find this margin? How do I predict this? As you can see, it's a time series problem. What do? Okay, I have no other information than my history. Let's look at how this value has changed in the history. So this is the notion of historical notion. I look at my history, and believe me, it's not just a single curve. You have a portfolio of assets. You need to look at all the variations of all assets. When you look at it, you're looking at sort of a single slit experiment, like, you know, putting up a torch through a single keyhole and see where it lands in different locations. So something similar. You look at all possible historical scenarios, jumps that has happened over the T days in the history, any kind of a look back period, and see what is that distribution. Well, I have seen extremely worse scenarios, or I can see extremely profitable scenarios. But what is my value at risk? It's a statistical problem. So I go for a confidence interval. This is the number major banks ask from their clients and major financial institutions ask from their banks. So this is a critical component in the financial system to make sure it's stable, even in a stress situation. So this is a clear example of a signal processing problem. So that's just giving you some insight into what that is. Well, this is called historical VAR. Let you know, Bank of England and even the European standards have incurred, so used to be historical VAR, they brought in something called filtered historical VAR, a classic example of signal processing. You actually do proper filtering here. If you're aware of Kalman filtering, what does it do? It's an auto-regressive version, like continuously regressing by itself. That's exactly what they do in the business as well. It's sort of that. So this like just an eye opener to say, look, this actually happens in the business in reality. So, okay, so this is the picture that we talked about. Look, are we really talking about things that we have never been exposed to? Absolutely not. So we come from, where we come from, we build products. We build financial technology. So whatever technology that you provide to this massive business spectrum is fintech. It's a massive business, just like what it used to be back in the early days of the millennia, where, you know, telecommunication was the biggest business back then. So this will become the next biggest business for the engineers. Well, pretty soon, maybe it's already there in a lot of the other countries. So this is where we are. We build, so whatever the blue letters that you see here are the pivotal platforms we build. This is what we generally call our products. So where I come from, I manage a product line for risk. I used to be managing a couple of other product lines before. And Hiran looks after all the products. So and Taya is essentially helping all the products to make sure we are competitive enough and cutting with the cutting edge technology. And who we are. So we are talking about things that actually happens in reality. So these are fintech products. These are built ground up. And believe us, we power the entire financial system through these products. Some people actually used to call us, we provide weapons grade technology, because that's how sharp we are in what we provide. So all the functions that we provide through this technology has one way or the other unavoidable relevance to financial signal processing. The classic example, what I explained earlier, was absolutely there in risk management. So I was coming out of a conversation yesterday from one of the new businesses setting up in outside Sri Lanka. A client I can't disclose right now, but I had this similar workshop talking about filtered historical VAR, and they were happy with what we offer. So this actually happens in the ground level, but just like any other domain, I mean, as an example, just because you learn relay fading, something like relay fading or something similar, I remember only relay fading for telecommunication, but if you join a telecommunication company, well, you can think relay fading will be used every day, but you never use it, but that's not your job. So similarly, the conceptual thinking is very strong and it's there. So whatever we are just telling you, the engineering principles are extremely relevant. It helps you see through this business. And to mind you, in a lot of these business entities, the organizations, the heads are slowly becoming the engineering backgrounds. As an example, within our own group, the chief technology officer who is running the entire global technology operations and the strategic, the roadmap for the group in terms of technology is a chemical engineer. So likewise, a lot of the engineering key heads coming into the picture, because the engineering see-throughness or the X-ray see-throughness and the knowledge is actually becoming extremely helpful in this business. So with this, I'll slowly transition to something that Taya can carry on, but for some reason, maybe I was too fast. I did not see anyone interrupting me, but feel free to interrupt at any point and ask me a question or Taya a question. Taya, you can take on. I'll just be the clicking helper for you.
Thanks. Yes, feel free to ask questions. So Najit really gave you a perspective on how kind of signal processing is more fundamental than we would naturally think. It's not really associated to a discipline. So I would also like to mention it here. I mean, we are quite glad that this kind of initiative has been taken up, by the university under the guidance of Dr. Chamira. It is a great initiative. I mean, it goes on to show the notion of these basics that are applicable across domain. So what I'm going to share here is to put it into some practical perspectives as to what these applications, and give you some peek insight into how you would fit into such a system, even if you come from a different engineering discipline, so to speak. So, I mean, we as a global financial technology provider, I mean, we have rolled out deployed systems across the globe. So we have been in this business for nearly about close to 2 decades now. If we step forward, I mean, I could just take an example. So if you look at these deployments, I mean, these are kind of covering most of the key financial hubs as well. So Najit, if we could step forward, I mean, for example, if we look at this, is just an example. I mean, if you look at the European financial system, a significant percentage of those operations, transactions happen on our platform. So like Najit explained, I mean, this is not just about a stock exchange. This is about everything that constitutes that ecosystem. Now, I would like to share some common thoughts, some insights we have had here in this course of business, of being in this business for 2 decades. What we feel is that now most of these systems used to be quite transactional systems back in the late 90s, early 2000s, similar to what we kind of figure when we think of banks and things like that, what we are mostly familiarized with on a day-to-day basis. But what we see is this natural transition, I mean, slowly moving away from being a core transactional system to kind of harvesting the benefits of intelligence that can be taken out of data. Of course, I mean, that's a natural evolution. So compute systems are growing in capacity. There is maturity of modeling of these systems. So along with it, it naturally comes in. So that's kind of a very interesting insight that we have got by what our clients actually ask from us, as there's been a trend like this. So it's quite an interesting thing there. If we move to the next slide, Ajay. I mean,
Sorry, apologies, Saya. Sorry, I actually can't see chat messages, but I was told that there is a question on the chat.
let's
someone
take
can
up
read it out.
let's take up the chat.
Yeah. You want me to read it out? I can read it out.
Please, Hiran, can you?
It's from Kalana Bevadana. You talked about the similarities between financial signals and other types of signals engineers are dealing with. What are the differences and challenges in processing financial signals compared to other types of signals that deal with time series data? And what sort of metadata, example, mean, variance, autocorrelations are used mainly in these fintech systems? Question, please.
Yes. Yeah. So I think those metrics are fairly fundamental, as in, I think it's a discipline agnostic metric. So anywhere you use regression or anything, so those are heavily used. But I think it's time we go beyond that. So the answer is that there is no difference. I think that difference is there when you look at the financial system as someone else's problem. So when you actually deep dive into that, it's no different to any other time series data. It's very similar. It's just that nobody has really looked into this in the same line of thinking. So it's very similar. There are no differences. If there is any difference, if at all, it would be the sensitivity of the data acquisition. You cannot just pick someone's data and play on it. So that's the only difference, if I may, because with any other natural system, there is no real bound of, this is somebody else's data, but financial data is extremely sensitive. So this is why, even if somebody is working on an extremely complicated model or, different metrics working on, it never comes out. It never comes out to the public domain unless you're working for that organization. So that's the only difference. So again, it's nothing to do with the signal or the information that's coming out. I think it's to do with, it happens behind the closed doors or behind the curtains. I don't know, maybe Taya or Hiran, you can add something to that, but that's what it is. That's what we see day to day.
Yeah, I guess, Najit, maybe like what to look for in that probably would help, right? In terms of, so is it the price movement or is it the total value? What do you look for in this? I mean, what can you say there? Like,
I missed that metadata question. So now, okay, so now well, let's take the investment side of things then as an example, because I think we're looking at the financial system. When you look at the investment side, you could say the metadata is, well, instrument, what is this asset is about, and then the price, which is more economic terms, quantities. So those are the metadata that comes in the time series. But if you slowly move into something like surveillance, as in someone's watching the financial system, what else are we looking at? Maybe you might want to profile the member. So there is a time series variation of your credit, as an example. Maybe, I mean, I don't know, maybe your age, maybe your friend network. So there is, ridiculously expansion of metadata that you're being watched at when it comes to surveillance.
Maybe what you share on Facebook and LinkedIn.
Absolutely. So this is one other area. So there is something lying in between what we call sentiment analysis. So it is not economic information, as in it doesn't really say what the price is. It's not like a static parameter like your address, age, or something like that. It's your thought process and it's your sentiment. And the financial world has gone to the level where quantifying the sentiment, as in, like Taya said, there are data providers like DataSwift in Europe, etc. So we've done this for the group before. You read it, make it machine readable, come up with a quantifiable number, correlate that with the economic number like a price, and help. Now look at this specific example, why this needs to happen within the closed doors. People don't publish that. Why? Because there's a reason why you do it, because you want to predict the price. And why are you predicting the price? Because you want to make money, you want to predict. Why would you share this with anyone else? So this is predominantly done within the investment banks and the hedge funds. They even use the Facebook messages, LinkedIn messages, any social media messages as their sentiment analysis. Sentiments comes with the economic data, collate it, and then they do signal processing. So your metadata increases, but the purpose is still the same. It always comes down to the point of risk and return. What am I going to do with this?
Yeah.
Great. I guess, thanks. I guess you can move on.
Yeah. So I think just to add a little bit, I think in terms of tooling, just like what Najit said, I mean, there's no limit to this. I mean, if you go to the fundamentals, pretty much all the mathematical tools, all the concepts that you have learned in signal processing is just equally applicable. How to kind of interpret it and what makes sense, what to apply where probably requires, you know, a little bit of domain specific thinking. But just few examples. I mean, we have come across eigenvectorization. We have come across approaches similar to Fourier processing, Fourier transformations. So all these are there. I mean, these are part of the basic toolkit. So I would say all of you here are probably well equipped on all those. I mean, it's just the interpretation, the context that's different. Yeah. So I think we can move on to the next slide, Najit. So here's the thing. So Sri Lankan talent, I mean, it is essentially at the core of all this, right? So and over these years, I mean, we are very comfortable. I mean, in a way, we are humble and proud to say that Sri Lankan talent has proven to be of world-class caliber, and we have seen it. So all these development, what we have been talking of here, has been done by engineers, no different to, like, you know, how all of you would be in probably times to come. Probably the only difference is kind of they were perhaps a little bit more adventurous to enter into a fintech kind of uncharted territory, but it goes on to show that they come with the background, they come with the basic engineering background, and it only takes a little bit of delta knowledge here and there to understand the systems. Like Najit said, I mean, with your engineering knowledge, you're able to see the systems at a different level. So that's been quite helpful phenomenally. So I think if we step forward, I mean, we roughly have about, you know, more than 500 colleagues in our organization, engineers with different expertise levels, but most of them, I mean, if you look at fintech, I mean, we really don't have a strong presence in academics to exactly target fintech. So all of these engineers come from different core engineering backgrounds and then kind of build that knowledge from there and helped us create world-class systems. So if we move to the next slide, ever since, I mean, we were founded in the late 90s, and ever since we were acquired by the London Stock Exchange Group, if you see that small, that orange circle at the center, we have been kind of at a pivotal position at the core of managing the group technology and operational excellence for all their different businesses. And it's been a huge responsibility. It's quite exciting as well, because what Najit and what we have been talking about in the first half of this session, all these challenges we get really exposed to. We get firsthand conversations, we engage with our clients. And the interesting part is, I mean, now we are being pushed to grow into different areas. I mean, there's no boundary as such. So it's moving away from purely transactional systems. So I don't know what to call it even. I mean, there's data, there is financial transactions, there's risk management. It's kind of morphing into different areas, and then kind of the boundaries are becoming a lot blurrier than it used to be. So in terms of opportunities, because we had been part of a global organization like this, we see immense opportunities here in this space. We don't know what even the future opportunities would be. It could be different overlaps that we haven't thought of so far. So that just keeps it quite exciting. So we would want to carry this legacy forward. I mean, with more and more of our engineers coming into fintech, showing interest in fintech, we see that this is just opening up and it's just waiting to be grabbed. So technology, I mean, let me make another point here. So technology is a means to an end. So to that extent, we go to levels that where it takes for us to get the right technology to achieve this goal. So if it's about building mission critical, complex, distributed systems to our clients, providing the level of quality of service, that's what matters. So we tend to not really associate ourselves with a particular technology stack, but that doesn't limit us. I mean, if it requires, we go to different levels of acquiring the right technology and getting it done for our clients. So if you take it, for example, Najit, if we move to the next slide. So there have been instances where we've gone to, even repurposing bare electronics and even designing digital electronic circuits to coexist in our systems using FPGAs. We've used a wide spectrum of software technology stacks that goes without saying. And on a perhaps less adventurous level, we have explored into platforms like vector processing units like GPUs, tensor processing units, and I think the emergent platforms are quite exciting here. Now, if you look at different providers who are coming up with different kinds of combined processor platforms where you can't call it a CPU, you can't call it an FPGA, you can't call it a GPU, it's everything. Sometimes it doesn't reserve a place because it's not specifically anything. So those kind of platforms, what we call heterogeneous computing platforms, are again a great kind of a technology platform on which we are kind of designing our products. So essentially speaking, I mean, technology is really not, it's a means to an end. We are not bound by a technology, or we are not associated with a particular technology stack. It's about going to any length to achieve the outcome, whatever it be. I mean, I don't know, 5 years down the lane, it could be something else completely that we don't talk of today. Still, it wouldn't matter for us. Yes, if you go on to the next slide, Majid, please. So here's just an insight. Let me you talk a lot about signal processing. We talked about what we do. Now, let's say coming from the industry, here's our perspective. So let's take an example. Most of all of you are university students, undergraduates, waiting to become engineers. If you step forward, Najid. So we see the university system actually kind of equips you with this basic knowledge of, you learn electronics, you learn mathematics, computing, laws of physics. Very, very, very important. Like Najid said, I mean, it really doesn't matter whether it's a chemical engineer or mechanical engineer or an electronics engineer. All it takes is how seriously that you have intuitively grasped these fundamentals, and that's what seems to work really well. Even not just about us, the people to whom we report to and the big bosses that we talk of, they come from different engineering backgrounds, and it sometimes amazes us to that level of fluency with which they deal with these concepts. That's not really their area of specialization in the university. So if you look at this, if you forward, yes. So if you look at, let's take an example here. If you look at electronics and telecommunication engineering, it goes with the naming. I mean, you learn the basics, and you also do learn a little bit of an application, which is telecommunications engineering. Now, I know for a fact electronics department at Moratuwa has biomedical engineering. I'm sure various universities, you will have different domain applications for the sake of explaining the engineering applications of these basics. Really well and fine. But what essentially matters is the next level. Yes, you also do acquire various other skills. You acquire to some extent in the universities. Once you start your career, you keep gradually acquiring this. So you acquire leadership. You learn how to innovate in a complex engineering environment, challenges to problems. So how we value is essentially at the top. I mean, it's about valuing yourselves as engineers who come with all of this. So in this context, what we have spoken about, all this about fintech and signal processing, it's no different. I mean, in this context, what we are saying is if I plot fintech here, there's no big difference. I mean, the fundamentals are same. We have seen mathematical concepts in operation. Computing is very much there. Electronics is very much there. Laws of physics also, surprisingly, it's there, because geometric Brownian motion to various things. Now, even if it's like Najit said, it's man-made, the amazing thing about nature is like, there are invariants that you come up in various domains. So like things like normal distribution, how many places do we come up with? Exponential functions. So the laws of physics are actually in a way really helpful to model the unknown if we know a little bit of analogy with something else. So that comes with some observation. Great people have done it in the past, and it's a moving thing. So what does it take to plot fintech here is just a bit of learning about the financial ecosystem, the landscape, how it operates and how to interpret perhaps. So I think this relates to that question that was asked earlier as well. So it's moving away from electronic signal processing applied to telecommunication engineering versus, for example, financial signal processing applied to fintech. So there's very little delta there. So this is essentially what we would like to, sort of pass as a message that we have kind of felt. I mean, this is really about, expanding your potential beyond the typical use cases to which you have been naturally associated in the course of your learning. If you just see it as key tools, probably the scope is much bigger. Fintech is just one of it. I would actually say it that way. I mean, there are many other areas, but it's very important, it's very imperative, and it's really in that sense, I mean, I'm really happy about this initiative, because it's nice to see how the common theme of signal processing really brings in different engineering disciplines. And we are just putting another data point onto this initiative by Dr. Chamira. Yeah, so I mean, this is the message. This is the note on the final note on which I'd like to close this presentation. So very happy to take any questions from the audience. I mean, whatever it be, whether it's signal processing, whether it's about the industry, anything. Happy to take questions, please.
Thank you very much for this very nice and detailed and interesting session on the financial signal processing, and especially making the relationship between what we are familiar with, like equations, mathematics, exponentials, and all of these things with the risk and return. So I think we may move into the question and answers session. Kavisha,
yes, sir. Let's move to the session.
okay. Yeah.
So everyone, so if you have any, so before that, yes, like few things, Q&A session. So guys, if you guys have any questions, please ask in the chat. So please ask in chat to unmute yourself and ask.
Hi, can I ask a question?
Please go ahead.
Yes,
Sure.
please.
Okay, so my question is something related to AI. So I just want to ask, like, how AI is nowadays affecting the fintech, and how likely are the fintech companies hiring the students or graduates with AI domain expertise? So it might not be a bit away from signal processing, but yeah, my question is that.
Do you want to take it?
Yeah. So I mean, you rightly contextualized it, because we also have that same view. I mean, it's no different to if you draw it in a line of progression, it's no different to signal processing. So if you look at the financial system, so we already have, we talked about, I mean, traditional systems, we have certain models, we have certain analogies using which there are certain established approaches we use. But then these problems, we usually have some view of the dimensionality of the problem. We know some nature of it. We know how to abstract the problem. But there is always an element of something that's beyond, where we really don't know the complexity, the dimensionality of that complexity that underlies. But then we do see possibilities that there could be some insights. Now, a few years ago, this wouldn't have made sense because just doing that would have been extremely impractical because of the costs of, doing it itself. But if you look at now, I will take a good example now. What Najit mentioned. Now, if you talk about sentiment analysis on social media, how do you go about, what is the dimensionality of the problem? Is there any predefined models? Of course, we know, I mean, there's natural language processing and various areas, but how do you go about making the output of it, quantify it and interpret it in a way that it makes sense? We see lots of similar opportunities in fintech for AI, but at this stage, I would say, I mean, it's not at a level like, like implementing a face recognition system on a surveillance camera. It's not that easy to kind of roll out AI-based systems in our experience, given the nature of this business. So again, what Najib mentioned, I mean, the sensitivity of data and the level of accountability. So there are a lot of other concerns and the implications that needs to be sorted out. So as a result, it's kind of probably not going at the speed as it would have in any other discipline. But my take is essentially there is a lot of room for these kind of functions. I think what we usually come across is that it's not black or white. It's not about AI systems, big bang replacing all the existing models or existing, human involvement. Not that. It's probably going to happen in stages. It might be that human involvement is there in these systems because end of the day, you deposit money in a bank and lose money or something goes wrong. You want somebody to be answerable, right? Nobody can say it's an AI system. So there is a level of gradual, acceptance there. Probably on day one, helping people take certain decisions, decision support system kind of thing, and then slowly moving towards augmenting human intelligence with these systems. But it's still hard for me to think that a day would come where there's no human involvement and regulators are fully happy just leaving it in the hands of an AI system. Probably it might surprise us, it might happen, but at this point in time, that's a bit of a challenge for non-technical reasons to say. But
yeah. So, well, if I add on something, and there is a question on the chat as well, but just to add to what Taya said, so like I said, financial system in general is a highly regulated system. So the fundamental problem nowadays, so I'll come to what we do as well, but in general, the financial system is facing right now is the explainability problem around AI. Like Taya said, so you have to be accountable and explainable to why you took a decision. Likewise, you can't just attribute that to a machine. This has been heavily debated and discussed across every regulatory body. Now, when it comes to what we do, if that was the question, look, are we doing anything related to AI? Can I maybe, I don't know if there's a hidden question around, look, can I join you and do something about it? The answer is this: AI is a massively broad topic. You have to break it down into pieces. We are doing a lot of things around, well, machine learning comes under AI. So right now, as we speak, we do machine learning work under surveillance. Do we have it launched out? We struggle to launch it out because we need a business to accept it, explainable, etc. But in-house, we do some work on that. And then there is, as Taya said, natural language processing. One of our, I think, founding members are working on it. Doing a lot of work on that as we speak. I think in one of the earlier slides, we talked about as a group, us acquiring another business. So as a repercussion, we are currently expanding ourselves. So I think the last slide you saw in the previous presentation are not bunch of Google images. That's our Malawi campus, so where we come from. So we are looking at expanding our crew. One of the reasons to expand is because of the acquisition, we are getting a lot of work into the space of data and analytics. And in there, natural language processing is going to be a key. Do we know how we want to do that? That's been still explored. So those are real examples of us doing AI work. But across the globe, in the financial system, the usage of AI is very primitive. Things like chatbots, etc. No critical decision is being made by AI compared to other systems. So that's just to complete Taya's answer. But sorry, before I hand over to you, Chamira, because there was a question earlier that says outside of private sector, how how can governments using fintech to improve economies was a question. But I kind of smiled looking at it, because we know a few years ago within our economy, within our financial system, there was a huge dip in our economy because of a bond issue, right? I don't want to make this a political debate, but that's simply because we did not have the right platform in our central bank. There's a lot of loose ends. There was no proper way of auctioning. It was simply done by, bad processors. In all the other economies, this is done by the central bank or an outsourced entity by a true, what we call fixed income. These are fixed income products, fixed income trading platforms. So that's a classic example. So we had a big dip in our economy because of that activity, as an example. And then goes without saying, you need to have a proper surveillance system as well. So it goes on. So governments can actually manage the economy. It's all about, overseeing it with the right technology. Yeah, Samir, you can go ahead. There's another question on the chat.
Yes, there's another question. Kavisha, would you?
Sorry, Najit, to add to your answer, I guess if you take the context of Sri Lanka, for example, all of you guys know the Colombo Stock Exchange, right? In terms of helping the economy, if you take the agriculture sector, farmers are not able to lock in a price. There's always that problem. So these are like, there are commodity exchanges. If you take India, they are very good in commodity exchanges, and one of our clients is that exactly doing that, National Commodity Exchange of India. So they have futures and options instruments that help suppliers, producers to lock in prices, and that gives price stability. So that's just one simple way in the exact domain we are, where fintech can help. So the agenda of the Sri Lankan government should also, the policies should have that kind of ideas as well. I think those are in the idea stage, but it doesn't get executed.
Yeah.
Thank you for that. So we have another question in the chat. What sort of initiatives can a final year student do to get prepared to work in a company like LSEG? Would there be need for specific research contributions, etc., or any qualifications that would be helpful in the future?
Yeah,
I don't know. Sorry, you guys can answer.
Yeah, sorry, I lost. Sorry, I actually had a hard stop at 12 o'clock, getting into a workshop with a client on a video call. But I told them I'll be ready in 3 minutes. But what's the question again? I'll answer very quickly.
What sort of initiatives can a final year student do to get prepared to work in a company like LSEG? Would there be need for specific research contributions, etc., or any qualifications that would be helpful in the future?
All right. So let's say, there are different kinds of undergrads, those who are passing out quite immediately, or maybe you're in the second year, third year. So just be mindful on Taya's slide that you had. If you can, I think, well, from an engineering point of view, I think if you look at our existing crew, a lot of our senior architects, including Taya himself, are engineering graduates. And of course, we need a certain degree of programming skills coming in if you are joining as an engineer, but it's not a must because these things can be, taught, and we can help you with. So just being an undergrad of Morotua is still fine. But when it comes to the domain, as a guiding factor, if you want to get into the business side of things or the product management or the product ownership side of things, it's good to get that exposure. Something like doing CIMA, CFA. It's a plus thing, but not necessarily. I think we have lot of us, even in the business side of things within our company, who have not done CIMA or CFA, etc. When you do that, you get the early exposure. But what we generally say is, I think that's what Taya's slide talks about. Generally, the undergrads that we see generally from Morotua have the right potential. I mean, simply if you do well in your courses and then just graduate with the right level of basic understanding with the right attitude, that's a good enough qualification. It's a plus if we have a domain exposure, which is why I think we are talking to Dr. Chamira. I think it came the other way around. Dr. Chamira and at some point Dr. Pratapa Singh and even Dr. Pascual at some point talked about introducing some financial markets related subjects just to give that exposure. So that's good enough because those things can be taught. Because when you're very strong in the fundamentals, like your physics knowledge, your math knowledge, I'm not talking about like advanced, like anything that you currently have, that's good enough. That's good enough to join an organization like ours. You've already been filtered through. Otherwise, you wouldn't be in this specific batch or wherever you are right now. So I don't know, Hiran, I don't know why you pass the baton to us. You can easily answer that.
No, yeah, I mean, yeah, absolutely. There's nothing specific. I mean, I did computer science, Najid did electronics, I did electronics. So we walked into the organization knowing not even what a financial instrument is. So that knowledge can be acquired. Probably in general for undergrads, what I would like to say, either you're a software engineer or coming into the business domain like me and Najid, what even, sometimes, especially those who go into the software engineering path, the soft skills, being able to articulate yourself, being able to like explore the domain, like, Thaya is a good example. Thaya understands the domain as well while he's doing the hardware accelerated systems. That really helps you to really stand out and do well. So really an interest in the domain and really an interest in, being able to, pitch at the right level. That kind of soft skills really do matter, and that will take you a long way. So that also you can, polish up after you join and things like that. But that will make a big difference, I would say, because you guys, intellectual wise, are really qualified to do this job.
Yes.
Yeah.
Really sorry, Dr. Chamira. Guys, I have to drop off.
No, that's totally fine.
My time, I have to drop off. Really sorry, but I'll catch up with you later.
Yeah, that's totally fine. Have a good day.
Thank you for inviting us and me in general. So thank you. Thanks everyone for listening to what otherwise could have been boring sessions. Thanks.
Okay, right.
And I can hang around. Thanks, Najid. I think there was a question that we skipped.
Yes, please, you guys go on. I'll leave.
Yeah.
So there is a question of that too. So I'm not sure whether it was answered or not. Can I read out the questions?
Yeah, sure.
So financial signal for a particular financial instrument is an ensemble of actions taken by different investors with different risk appetites, right? How can we use these informations taken from the overall movements of a financial instrument into predicting information for a particular investor? Unlike an electronic circuit or device, the human perception changes at a great rate. So how reliable these predictions made for a particular investor?
Yeah, it's I think I'll try to answer this question. It's behavioral. The financial systems are driven by human behavior. I mean, as Najid said, it's a man-made system. The value you put for an asset is all man-made in the end, right? Of course, there are underlying reasons for that. I'll give you a couple of examples. So yes, it is the decisions made by different investors based on different information that they get. But in today's day and age, that information is also widely shared, and there's also this kind of herd behavior, right? Couple of examples. One was If you look at I guess you guys might not be aware the housing market crisis in the US that had the financial crisis in the US, where big banks, big investment banks had to be bailed out and some went bankrupt. So there was an instrument called the credit default swap, which basically was like an insurance scheme, like you take on your car, so you have insurance on your car. So the credit default swap also was how a perception of the credit worthiness of a company, like whether they can pay up their obligations. So people were actually using this instrument to make money. I mean, you don't even own the asset, you don't even own the company. You were just investing, saying, okay, I think this company can pay up credit, or I don't think this company can pay up their credit. So that perception kind of, with the housing market crisis, it took a different turn where that actually drove the perception of people on these companies, and the prices of the value of those companies really came down in the end. So that's one example, right? So there's some help. And then recently you might have come across the whole Reddit.
Hiran, excuse me. Actually, I have a meeting at 12:15 with the Dean Board of Exams. So I have to leave now. So Kavish and Ramit, please continue the meeting. And so again, I would like to thank you and Thaya and Rajit for actually this very interesting workshop, and have a good day to all.
It's our pleasure. Thanks.
Thanks, Dr. Ramda. Thank you.
Most recently was this the Reddit investor community that took down some of the hedge funds. So they were the hedge funds, these are investment funds. They had betted against some companies, I can't remember the exact company, of failing, like, they would liquidate and they would fall. The Reddit community, these are like investors like you and me, they drove the price up of these companies in the market, right? So again, so these are exceptional behaviors, but my point is, although it's decisions made by different investors, they in the end all align, and it gathers momentum as well, because everyone consumes the same piece of information as well. Thaya, is there anything you'd like to add on that?
Yes, Hiran. I mean, Hiran, you gave some nice practical examples. So I can imagine, I mean, you are probably comparing it to electronic circuit with that certainty that you have in a circuit, because any number of times you excite it, it works in a particular way. Of course, here it's slightly different. Like Hiran said, it touches into the behavioral aspect, but it's not. So it is a different level of complexity. I mean, you're true. I mean, when how different people in different geographies, how they would react, and how those sentiments would get reflected on a financial signal. And then there is a looping back as well. There are people who, or the same people who look at the financial signals and then change their perception. So it's probably like, certain electronic systems where you have feedback loops and how you model those systems. And what is a crash is almost like an electronic system, a runaway in signals and systems, where your signal just, keeps going down or keeps going up. It never gets contained or keeps oscillating forever. So these are conceptually the same thing. How you apply it, of course, there are how you interpret it and apply it in the domain of financial systems, there are differences there. And then collective behavior, I mean, that's why probability actually plays a very important role, because however different entities, I mean, whatever the simple example, what for a layman could understand, whatever the distribution is, if you keep adding those distributions together, you tend to get to normal distribution. Now that's a law of nature. That applies here as well. Now, value at risk, what Najit explained, what we call an ideal value at risk return distribution is actually a normal distribution, because it has to be an outcome of large number of actions that contribute towards it. So it has to converge towards a normal distribution. Now, in certain instances, if it's just just myself, just I and Hiran, or trading with each other, that's nowhere close to normal distribution. So we come across things like that as well. When that happens, what happens in the financial system is, if you don't, what we call, if there's no official basis to ascertain something, what the price of a stock should be, what we look at is, okay, let's take the price of Apple, and if the price of Apple is, there are only two people to buy that, both of them are giving way off numbers as to what they're willing to buy that Apple for. We look at the price of oranges and kind of try to get a feel of how it should be fairly priced. I mean, if the price of oranges is this, if it's 100 rupees, can an apple be 1,000 rupees? So those kind of interrelationships really matter. Wherever if we don't have the numbers to make statistical sense, or even if we don't have the numbers, it makes the model reasonably accurate enough. We try to have, look at related aspects and try to derive what it should be. So it's a nice equilibrium, so to speak. I mean, a complex financial market is in an equilibrium, which actually helps us, because if you know one part of it, and if you know it's in equilibrium, you could probably figure out a lot of other things. And if something else is not in alignment with it, that's noise. That's an outlier. So that's how we would define noise in financial systems, because to say something is a noise, we need to understand what is normal and what is an outlier. So conceptually it's the same, but how we would interpret it, how we would apply it, there are certain domain specific ways of how we would look at it.
I just posted some links also if you guys are interested to read up further of the two examples I mentioned.
Thank you, sir.
The company was GameStop that they betted on the chat. But yeah, there is so much material on especially on, if you go further on signal processing itself as well on these financial markets. I'm sure you'll find plenty of resources online. Any further questions?
I think that's it. So thank you everyone for asking questions, and thank you for
we can't hear you. Not audible.
So can you hear me now?
Yeah.
Okay, so thank you, sir. Thank you for answering the questions, and everyone else for asking them. So we have some updates about the competition. So we will be we'll be postponing the submission deadline because there were some exams and other things. To give the time for participants, we'll be postponing the deadline until to October 1st submission deadline, and after that we will start the People's Choice Award after that. Quickly, Marcia, is it possible? Okay, so to help everyone with making the video, we have found a link where you can refer to making presentations using Zoom. Hope everyone finds it useful. And that thank you again for you guys for coming to this event and doing this for us. We actually made something for you to show you. Thank you for helping us in doing this workshop. Thank you, Mr. Hilan Jalan. Also, very sorry.
No, that's okay.
We are quite happy to be a part of this. I mean, we are fully supportive of this initiative, and it's just beyond engineering and our organizations. We are fully supportive of these kind of broad initiatives. So we would always be supportive of this initiative and keep going.
Yes, sir. Our heartfelt gratitude for being an informative speaker at Signal Processing in Financial Markets workshop held on 16th of September 2021. Thank you for the strength and passion that you exemplified, sir. So then now there's a small video which gives you an essence of what our student branch really does.
The grand prize goes to the team T Cubed from the University of Moratuwa in Sri Lanka.
Yeah, that's it. So we are at our last few minutes for today's session. So I'd like to thank everyone for joining us today in this wonderful workshop. Hoping your fabulous support in future too, till we meet again in an amazing workshop. Thank you.